in January of this year, Fannie and Freddie started putting dozens of HOAs on the unavailable list. Unavailable is the Fannie and Freddie term for unwarrantable. So if you look it up in the CPM, and I can look it up for you, by the way, if you look up an HOA in the CPM and it says unavailable, you cannot do a Fannie or Freddie loan, period. It's a hard line. And the only way around it is to get the documentation that Fannie and Freddie want to take it off the list, and you have to give it to your lender, who your lender has to be a Fannie Freddie seller servicer, who can then send that information to Fannie and Freddie and ask them to take that condo off the list.
So in other words, it is possible to take it off the list, but it has to be going through the process.
Correct.
So initially they might say no, but if you provide documentation, and what kind of documentation do they require to take it off the list?
Well, documentation that proves that whatever the reason it was put on the list has been remediated.
And who knows about that?
Well, I can look in, typically the condo project manager will tell you exactly what the issue was that put the HOA on the unavailable list. So it'll say things like critical deferred maintenance, and then so like it was a balcony issue or a roof issue or whatever, and then you have to show that that's been done. So if they've got balcony maintenance going on,
in other words, if problem is removed, then they might reapprove it.
correct, you can have it removed from the unavailable list.
Yes.
Now that's a process though,
Yeah.
so you don't want to do this in a 21-day close. That's not going to happen.
So basically, we have to know this when we have, let's say, we have a purchase, an example, and before we even issue pre-approval letter, because you can give approval on the client, but project we don't know. This always creates this question with real estate agent with a process. How do I know if it's? I have to check. In other words, I immediately I can know it. Okay, it's interesting because let's say I do pre-approval based on income information or even run credit, but only after I'll get the project when loan is offer is accepted. Only then I can check it, or I can check it in advance.
But
How
who
you
will
can
do this?
check in advance?
Yeah, but who? But by the name and HOA docs.
Yes, let's say we have to
But
ask.
you can check in advance and they didn't accept it his offer.
Right.
I think, like in my mind, I never will be provide no loan contingency if somebody buying condo. Because you cannot like say for 100% we can get loan.
Yeah.
If it's single family, it's only about buyer. If it's connected with HOA, it's.
Yeah, so basically, but in this case, when a real estate agent wants to make an offer,
You have to
we ask
explain.
question which property address it is, not just, and then we have to do our research, and then we have to go through the steps because if it's on the list,
What is the list? What's the name of this list?
It's the Fannie Mae Condo Project Manager application, and you don't have access because you're not a Fannie Freddie seller.
so we have to. So this
You
is
come to me.
And
This
you can
is
check if this condo.
the king of the hill. Now how it's getting it. You
And
see.
who
Let
will
me
put
finish.
them on the approved list,
So
let's say,
what-
in documents? You will work with us on this?
Yeah, so the way it works is you get the condo's legal name, right? So for example, Shelter
HOA,
Creek,
you mean, yeah.
HOA legal name, like Shelter Creek.
Yes.
You send it to me, and I need to know that the legal name and the city and state it's in,
Yeah, that
I can look it
regular
up.
share.
and tell you if it's on the unavailable list. But
Okay.
And
other
you're
part of that-
also going to tell us what are the deficiencies.
well, yes,
Because on the available list, what need to be fixed, then we have to check with the project if it was fixed or not, and only then we can know how to treat it. Because if it's a non-warrantable condo, completely different lenders, different
Correct.
programs, different rate, everything's
If
different.
it's on this list, then it's gonna be counted as a non-warrantable condo?
100%. If it's on the unavailable list, that
Yes.
means Fannie has determined it's unwarrantable, 100%.
Yes.
And
And
if
the
we-
only way to make it unwarrantable is to have Fannie change the status on that website. And every
Which can
lender
be done
says-
through the lender.
Okay.
Yes, only the lenders can do that.
So,
And again, you
which
have to-
means that in terms of the purchases, time.
And how
Exactly.
long? Yeah, this is again questionable about time. If
There
it's
is
like,
no guaranteed time because
Yeah, who knows how
Fannie and
long?
Freddie do not guarantee turn times. It's
Yeah.
when they can review it. So I think I've been told to allow up to 30 days just for Fannie and Freddie to review it. So
Yeah,
it's
like-
not something you're going to do in the middle of a purchase.
So that's interesting twist in the work for listing agents. Because listing agents can inform us, let's say they're getting a listing. And if you're working with listing agent and you want to get buyers, then what you do, you're checking in advance if it's an approved list, and if it's not, while you work with them, you say, okay, I can work on getting this approved, but one condition only.
you know,
I will do it if a buyer is going to be working with me. If not, I'm not interested. You see, you have to leverage this.
But most of listing agent, if it's something that problem and it's non-warrantable condo, they know that. They even though what they do, this is what I had like 4 times situation. They just have like, we have this problem, but you can work with this particular lender who just provide financing for our project.
If it's known for non-warrantable, what makes, I faced
It's
it
the
before.
credit union.
This, no, but this point is like this. It's in the surface, it's simple. Let's say there is a ownership of the project or something else which creates non-warrantable. In this case, it's different. They don't know. They cannot know it unless it's checked, because only lender who is selling to Fannie and Freddie can find out about this. You see, this is an interesting moment.
Yeah.
So every condo project, if somebody gets in a listing, they have to call me, and I'll call to JD. He'll check it, and only then we know what kind of project it is. Only then we know which lender we're going to work with.
And let me address that. That's not correct. If a realtor comes to you and says, here's my project, I've had this problem, but here are lenders who recently did loans
They
in it.
just
And,
advertise.
well, wait, let me finish. Because I can do a loan in a project on June 1. And then on June 2nd, Fannie puts it on the ineligible list. So that realtor who's looking retroactively at the lenders who have done loans, that means nothing because it could have changed status in the condo project manager or advisor the day after those were closed. So it's still a fully unwarrantable condo, and that lender who did that loan a week ago or a month ago can't do them any longer. So that realtor's giving you misinformation, and that's because the realtor doesn't understand what's really going on.
Yeah, that's why it's a great opportunity to
Yeah.
work with the condo listing agents who work with condos.
That's a very common approach to look and say, oh, these other lenders did these loans here, it must be lendable. That's not true, because again, the status could change. Fannie and Freddie are adding more HOAs every single day to the unavailable list.
Yeah.
So, and again, if you're on that list, it's a hard line, no Fannie or Freddie lending.
But you still can do non-warrantable, let's say if we can't get approval on,
Well,
You can-
non-warrantable separate, right, or a different issue.
Now, if you cannot be, let's say if it stays on a list, let's say you cannot be removed. Let's say whatever happened during this time, then it becomes non-warrantable condo. Then a non-warrantable can then be done by 10 different lenders, including
but you
Ameris.
can do.
Yes.
Yes.
Well, here's what's important on that is you need to understand why it's non-warrantable.
Yes,
Because, and there are many reasons. I mean, one of the big ones, of course, is deferred maintenance. But another really big one, which is what's really hitting condominium lending hard this year, is the insurance deductible requirements. So both, Fannie and Freddie have a requirement that your insurance deductible can be no more than 5% of the insured amount. So say your deductible can't be more than $5,000 on a $100,000 coverage. Well, the problem is that there are coverages that go above that limit on a per unit basis, because what they'll do for example, water damage coverage often says deductible is $25,000 per unit. Well, if they've got 100 units, that's suddenly $2.5 million. So And unless they have $50 million in coverage, they've blown it. So a lot of HOAs are now on the list because of that. So again, when you talk about non-warrantable, you need to know, is it a maintenance issue? Is it a litigation issue? That's the other one. Or is it an insurance coverage issue? You need to really dig in and find out why it's not warrantable.
Okay.
Can you see the reason or you don't see, you don't know?
I'm sorry?
Can you see the reason or no?
They can.
If I'm looking it up, I'll have it, you know, it's just a comment. I don't have all the full details, but it'll say something, it'll give me something, it'll say like deferred maintenance or insurance deductible or litigation. So I'll have a very brief detail of what's going on.
So who can find the whole answer? We do?
Yes, at that point, you know, I'll say, this is what Fanny is saying is the problem.
Okay.
And you'll go back to the HOA and.
So
'cause the
basically,
HOA
yeah, we have to work with, again, with listing agent to determine what really what's the issue. Now, it's a time and a process. You can adjust it, and this is what, from my point of view, is wonderful opportunity. Because I see how I can make things happen.
Yes, and you have knowledge.